The next asset on our watch list for today is the GBPUSD, and in fact in the last 24 hours the GBPUSD has done very well, as we have been buying this asset ever since the price action broke out the 1.22300 level yesterday morning, and since that moment price action had moved significantly well in our favor. Well, the GBPUSD at this point in time is roughly running with over. Okay, let's see what is going on here from a technical standpoint. But before I go into the technicalities here, remember that we are looking forward to. We already saw the release of employment data from the United Kingdom, which came in with mixed data. We saw some favorable ones and some who are not too good at all. But the market reaction has been very bullish. However, there is still an high anticipation for the upcoming US inflation data, which will also impact market sentiment. Now, what we are going to be doing right now is to see how the market is likely going to react to this event based on how it has been anticipating it. Now, the first thing we saw on the 1 hour time frame GBPUSD chart was the fact that price action was initially caught within a range between the 1.22375 and the 1.22225 level for the first 10 to 12 hours of the week, to emphasize the uncertainty that had gripped the markets at that point. And I told you all yesterday that I bought the GBPUSD at the 1.223, and I told us all that we want to be capitalizing on the breakout retest of the 1.22375 here, which happens to be the resistant line of that range. And for those of us who missed out on the breakout, we can see what happened here. The market came back to do retest of structure. In fact, we had multiple retests of the structure. So for those of us who missed out on that opportunity, the market gave us ample time to be part of that uptrend move. And as you will see, we saw price continue to climb to the upside. And remember, during our live session yesterday, I emphasized that we will be looking out for more opportunities at the breakout of the 1.22535 level. And though we were not here, this is where we said we are going to be adding more position. But personally, I added more, had a breakout of the 1.22710 and of course the 1.22805. And if you are taking advantage of these ones too, well done, and kudos to you for being on standby to capitalize on that move. Now, for those of us who still have a buy position running, that is, if you are taking it from the first entry point, you will currently be having about 55 pips in profit, while the second one from here is about 50 pips in profit, while the third one here is about 35 pips in profit. So we are roughly about 120 pips, which is not bad for the start of the week. And of course, you know how we do it in this community. As soon as price action moves significantly well in our favor, we want to be moving our stop losses, secure and protect the current positions while we look out for new opportunities. Now, with the way things are going right now, I will suggest that anywhere between this range, that is between the 1.22805 and the 1.227, seems most appropriate to secure all positions, because this is right below or close around that ascending trend line, as you will see here. Now, with a well-secured position, how do we intend to capitalize on the next move? Now, before we go into the details here, and for the sake of clarity, let me quickly share something with you that we saw on the higher time frame. And for the sake of time, I will only go into the 4 hours time frame. And for those of us who are part of the live session yesterday, you will be familiar with the structure, and I laid emphasis on the importance of this impulsive move that started a couple of weeks ago, giving us this impulse leg right here. And I mentioned that the whole bearish momentum we noticed throughout last week may be as a result of profit-taking activities, which usually reflects on the chart as a retracement move. And of course, using our Fibonacci retracement tool, we projected an area where the retracement is supposed to end, and in fact we marked out between the 61.8 and the 78.6% of the impulse leg, and we saw what happened here right here on Friday. We saw a sharp rejection of the structure, and of course the breakout of the 1.22300 00 area emphasize that price will be going to the upside. So everything about this chart is just screaming bullish here. And another interesting thing about this whole structure is how price respected this ascending trend line multiple times since last week, Wednesday. And in that regard, as long as price remains above this ascending trend line, we want to continue to hold on to a bullish bias. However, something interesting is going on in this market right now as price action is at a crucial juncture where we begin to notice some selling pressure resume around this area. And this area we are talking about here is the 1.2300 level. It's a psychological area considering the round figure of that price. And in fact, if we look at what happened around this level last week Tuesday, we saw selling pressure there. This happened till Wednesday. We saw the same thing happen till Thursday. In fact, it continued to push price to the downside. And right now, price is back into that structure. Now, the thing that will further confirm and make us feel comfortable in this buy position is for price action to break out, retest the 1.23 to incite more opportunities here. However, if this does not happen, the tendency that sellers will still come in is still very visible. So now at this point in time, I want to see price action take out the this 1.23 area for me to feel comfortable selling. However, if the sell pressure persists just like it had been doing since last week, I would rather want to see price break down this ascending trend line before I can consider selling this asset. So if price will break down this ascending trend line, only then will I start considering selling. Then I look for confirmations like retest of structure, after which I want to be part of that bearish move. So this is the only condition here that will make me want to sell. But as long as price still remains above the ascending trend line, we could still see situations where price will drop back into the structure, form some reversal patterns before we have another move to the upside. And in fact, we could see something like an inverse head and shoulder. If you look at this structure closely, we can see we have the left shoulder right here. Price dropped back into the 1.23 area. Then we have the head. Then price came back again into the 1.23. And we can have a situation where price will drop to transition to form the right shoulder before the breakout retest of the neckline happens to incite an uptrend continuation. So I still hold on to a bullish bias here, and the only condition that will make us sell is for price to drop below the ascending trend line to the downside. So these are my views on the GBPUSD for today. If you have any questions, feel free to let me know in the comment section. So I'm looking at buying, adding more buy positions at the breakout of the 1.23 area. So I will be taking the next 10 to 15 seconds again to see if there are any questions, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions.